Hello and welcome to Business Incorporated Live on Channels Television. It's a brand new trading week and right here in Lagos, Nigeria. Here are the stories you should be looking at. MTN, Seplat and Aradel set to pay 213 billion naira dividends this week. Aradel leads with 1.45% yield. Kenya Power rolls out automated OCR meter reading to boost billing accuracy. Tanzania to begin construction of strategic Kisiwa Ngao port in December. And it's good to have you join us. I'm Ladi Williams. Let's get a quick check on what's playing out with the markets. The markets are bubbling right now this fresh week. And we see all prices slip today, extending losses from last week as Russia-Ukraine peace talks. They've edged closer to a solution, and the U.S. dollar, that strengthened. Both crude benchmarks were down about 3% last week, and we're still seeing that pressure this week. Earlier today, it was down less than this, more like 5 basis points lower early in the morning, and we're still seeing that downward pressure there, $61.11 per barrel. That's for Brent crude. And we see WTI there still below $60. Still on the what's playing out with geopolitics there, we're seeing some progress to talks and a peace plan that would require the war-torn nation, that's Ukraine, to cede territory and walk back plans to join NATO. So that's what's driving sentiment right there in the oil market. Let's get a check on metals now. We're seeing gold prices they dip for a third straight session today as the dollar firmed near 6-month highs, and that's weighed on the yellow metal, while market participants await more clarity on the U.S. interest rate trajectory. I will see it's mostly green on the screen right there for the metals market. Spot gold 0.4% down. U.S. gold futures, that's up 0.8%. Spot silver unchanged, just below the $50 mark. That's per ounce. Platinum 1.5% up, $1,533, and we see palladium also to the good there by 1.3% at $1,392 there. So it's not a bad picture right there for the metals market to start the week, even though it also had a negative week last week. That's talking about gold, about 1% drop for the week. All right, let's look at what's playing out in East Africa. Now we see Kenya Power. They began rolling out an automated meter reading system aimed at improving accuracy and efficiency of its monthly billing processes. The technology, known as optical character recognition, that's OCR, allows meter readers to scan meter displays instead of manually keying in readings, a process the utilities firm says will reduce human error and speed up data collection. That's what's playing out right there in the power sector in Kenya. Then we see the World Bank has upgraded its economic growth forecast for Kenya in 2025 to 4.9%, up from 4.5% previously projected. The improvement is largely driven by a strong rebound in the construction sector, which had struggled in 2024 due to political unrest and fiscal concerns. According to the bank, growth in construction during the first half of 2025 helped offset a manufacturing slowdown. And to support sustained growth, the World Bank is urging Kenya to implement structural reforms, especially to boost competition and attract investment right there in Kenya. And we see the Tanzanian government is set to kick off construction of a new strategic port in December as part of its broader port development plan led by the Tanzania Ports Authority. The project, which falls under the National Port Development Plan running to 2045, aims to build a special island port in the Mtwara region called Kisiwa Ngao Port. This port will be designed to handle dirty cargo such as coal, sulfur, cement, materials that require careful handling. And also we'll see what's playing out now in North Africa. Egypt has reported a 19% year-on-year rise in its non-oil exports between January and October 2025, with total revenues hitting approximately $40.6 billion. According to the Investment and Foreign Trade Ministry. The report issued by the General Organization for Export and Import Control attributed the growth to an expanded base of Egyptian products and improving competitiveness across industrial sectors. As per the report, non-oil exports to Egypt's 5 largest destination markets increased sharply by 37% climbing to $16.1 billion from $11.7 billion in the same period last year, reflecting stronger external demand for Egyptian goods. That's what's playing out right there in North Africa. All right, let's head on to South Africa now. The 2025 G20 Leaders Summit in Johannesburg. President Bola Tinubu, represented by Nigerian Vice President Kashim Shettima, underscored that Africa's critical minerals hold the key to the continent's industrial transformation. He stressed that true prosperity will only be achieved if these resources are managed with transparency, fairness, and accountability. Our South Africa correspondent, Innocent Simosa, has more.
Of the G20 member states and invited countries.
The G20 South Africa Summit Leaders Declaration reaffirmed its commitment to helping low and middle-income countries address debt vulnerabilities in a comprehensive and systemic way.
When we began our presidency, we pledged to mobilize the G20 to strengthen disaster resilience and response. Climate-induced natural disasters spare no country. Disasters know no borders. But their toll is heaviest on those without the means to recover and to rebuild.
Meanwhile, Nigeria has endorsed the G20 Ministerial Declaration on Debt Sustainability.
The current multilateral framework do not adequately reflect the realities of today's world. Many developing nations continue to face systematic barriers to economic growth, trade, and financial inclusivity. For trade to be truly inclusive, the G20 must take bold steps towards reforming the international financial architecture and global institutions.
The president of the U.S.-Cuba Trade and Economic Council says President Donald Trump made a mistake by skipping the G20 summit in Johannesburg.
It was a mistake for him not to be here because, yes, a president of the United States absorbs a lot of oxygen and gravity wherever they go. But if you're not in the room, you're not able to influence. And so he's watching from Washington, and the G20 happened. And one reason it was consequential, and it's because of the unknowns, and that is President Trump releases a 28-point Russia-Ukraine plan. Yesterday, the leaders that were here were able to get together, the European Union leaders, President Erdogan, they were able to get together and say, how do we respond to this?
I think that Trump has got an agenda. He has been busy with the campaign. He knows that what he's saying about South Africa is untrue. You can't have a massive State Department that has billions of dollars and hundreds of thousands of employees, embassies all over the world. In South Africa, they have 3 embassies.
The German ambassador to South Africa, Andreas Patschke, underscored the importance of cooperation.
There's a lot of tension, but I think the main message is a message of cooperation. So we need to cooperate to solve our international problems, and we want to cooperate.
No matter what the U.S. attitude is, China will still be firmly standing with South Africa and the rest of the global South country.
The G20 leaders have adopted the declaration. Now the question remains, what's going to happen to continuity, given the fact that a big chunk of that declaration speaks about climate financing, and we know that America is not for climate financing. We do know, again, that America and South Africa will be part of the G20 Troika. That conversation around climate financing will be key in next year's G20. From Johannesburg, South Africa, Innocent Simosa at the G20 Leaders Summit, Channels Television News.
All right, thank you so much, Innocent. Let's get a check now what's playing out with the markets now, starting on the African continent. We see trading in Africa there. We're seeing for the NGX starting off after a tough week last week, and we're still seeing downward pressure there, but just 7 basis points. That could switch at some point. But also big this week, we have dividend payouts on the Nigerian exchanges, MTN Nigeria, Seplat Energy, and the Aradel are set to pay a combined 213.31 billion naira based on their 9-month 2025 results. Among this week's payers, Aradel offers the highest yield at 1.45%, followed by Seplat at 1.24%, MTN Nigeria 1.08%. Last week, NGX Group, Berger, and Presco distributed a total of 12 billion naira in interim dividends. Analysts note that investors looking to grow returns can reinvest these dividends into stocks with strong fundamentals and attractive yields, including MTN Nigeria, Airtel Africa, Lafarge Africa, Unilever, GTCO, and the likes. Then we see where the G20 is happening now. Johannesburg Stock Exchange, that's down 3 basis points there. 109,608, firmly below that 110,000 level. Let's look at other parts now in Africa. We see for North Africa, EGX 30, marginal gain there, it's holding on 40,000 points. Nairobi Stock Exchange on Friday, down on Friday, 0.19%, 187.91 points. All right, let's get a check on the Gulf region now. I'm looking at the UAE, negative this week again, kicking off this week. This pressure might be from the sell pressure we saw last week also coming into this week. Let's look at the Saudi Tadawul and the Qatari index. This was the lone gainer in the previous trade, but we're seeing a drop again, 0.19%, 1.05 for the Tadawul. Let's get a check on the stock futures now. They climbed today, earlier this morning, as you know, the market is seeking a rebound into Thanksgiving holiday week after a slide that's knocked the air out of this year's AI bull run. Futures on Dow Jones Industrial Average there, 1.08% up. S&P futures 0.98%. Tech-heavy Nasdaq 0.88%. And we did see Bitcoin did lead that over the weekend there. We saw Bitcoin there recover some gains. So I guess coming into this trade, we might see a breather there for most of these tech stocks. Let's get a check now on Asia. For Asia-Pacific markets, we've seen the Nikkei closing there 2.40% down. The Kospi 0.19% down. But the Hang Seng Index, that's managed to stay up there 1.91% to close. Then other parts, we see the Nifty 50 kicking off the Monday trade 0.13% down. All right, let's get a check now what's playing out in Europe now. We have Vanda Imrak joining us from Berlin. Great to have you. Vanda, how's the market kicking off in Europe?
Hi, Laddie. Thanks for having me. Investors here have a lot to watch out for today. Among them was the most important business climate indicator. That's a German business climate index. And this seems to have fallen by 0.3 points. Now, analysts had expected an increase. So this fall comes a bit of a surprise. And like I said earlier, this index is a big indication of Germany's economy and how it's doing. And it also shows how much trust businesses have. And what this fall shows is that the trust is lacking. The business climate index is watched by investors, markets, and everyone very closely. Other things moving the market potentially here are speeches from ECB Chief Christine Lagarde that could set the mood for what to expect from Europe in this week. Economic data is expected later in the day from the US. Now, Germany's DAX opened this morning with gains and continues in the green. Just slight gains as we talk, so about 0.55%. Now, some of the best performing on the DAX is Bayer, the chemical and pharmaceutical company, which is up by approximately 11%. And the pan-European stock 600 is also in the green, up by just 0.02%.
All right, let's look at another story now. We see China wants closer ties with Germany, and that's what the Chinese premier said to Germany's chancellor over the weekend in South Africa. What's on the table here?
Yes, China and Germany are two of the biggest economies in the world. China bought $95 billion worth of German goods last year. Now, around 12% of these purchases were cars. That's what Chinese official data shows. And Germany is among China's top trading partners. And Berlin purchased over $100 billion worth of Chinese goods, with chips and electronic components kind of dominating the sales. Now, some of the sectors China itself outlined for further cooperation with Germany is biomedicine, hydrogen, energy technology and development, smart manufacturing, intelligent driving, and coming up with new energy ways. So these were some that were named by the Chinese premier himself. Now, for Germany, China is a market like no other when you talk about cars, but also when you talk about chemicals and pharmaceuticals. German companies have a large presence in China, so cooperation between the two would be welcomed by both economies.
So the two economies are tied together, in many ways. In which sectors would you see them collaborate?
Yes, China has shown a lot of willingness to strengthen partnerships in Europe. President Xi Jinping has shown interest in stepping up investments in Spain as well, for example, pushing for closer ties. China is trying to have strong friendships in Europe because it is a great market for Chinese goods, but especially electric vehicles, which are being produced in surplus in China, and they're looking for new markets. Now, the issue is that China's reputation in Europe is not in a great spot. So, courting major European economies like Germany and even Spain, announcing investments or advancing trade works is going to help China get some more strong footing here. Europeans are a bit skeptical of this, especially because they view Beijing's ties with Moscow as dangerous, especially because of the Ukraine war. And Germany is now trying to use its influence with China to pressure Russia to end this war.
All right, thank you so much, Imrak, there for giving us the details of what's playing as a brand new week. We'll see how the markets play out this week. Thank you.
Thank you.
All right, now let's flip over to another conversation that delves into the cryptocurrency industry and digital assets. Basically, we'll dive into a major development now in the African financial landscape, and it's what's playing out with mainstream financial institutions now integrating cryptocurrency trading, into their services, and that's happening in Africa now. This move marks a significant shift in how banks and financial institutions on the continent are approaching digital assets, from, providing more secure access to crypto markets to potentially redefining the investment options available to African consumers and businesses. This is a story that touches on innovation, regulation, and the future of finance in Africa. We'll explore the implications, opportunities, and risks now to help unpack this. Joining us on the show, we have Ayotunde Alabi, he's the CEO of Luno Nigeria, is joining me from our Abuja studio. Great to have you on the show. Good afternoon.
Good afternoon, Ladi. Happy to be here.
Fantastic. So we're seeing a shift now when it comes to traditional finance, also, getting an alignment, with digital finance, at this point, with an African bank actually looking to, incorporate, digital asset providers. How significant is a move like this, for, mainstream adoption and cryptocurrencies in Africa?
No, thank you very much, Ladi. I think it's a fantastic move. It's a step in the right direction. It shifts the conversation first from retail to now institution as it pertains to crypto. Now, banks are, starting from South Africa, what you're referencing is the partnership between Discovery Bank in South Africa and Luno in South Africa as well. So this is the first of its kind in Africa, and it's not only significant for South Africa, but for Africa as a whole. It's almost showing that it is possible for banks, the traditional financial institutions, to partner with crypto in a way that is safe and also regulated for their consumers. So the structure we have currently is a model called the B2B2C, which means the business to business to customers. So asset managers, financial institutions like banks, pension fund administrators are now, this is going to signify that there is an opportunity here to be able to offer the next wave of innovation as it comes to, as it pertains to, financial instruments to consumers as well. So it's a fantastic development for not only South Africa, but also the African continent. It shows that we are ready and that Africa as a whole is ready for the next wave of innovation, from an investment perspective.
All right. Now, talking about investment, what does this mean for, retail investors, and businesses in terms of, access and liquidity?
No one has as much liquidity as the banks across the different financial institutions or across different, financial landscape, as it were. So it means deeper liquidity. It means there's not going to be, the rails that were not available to pension fund administrators to retail investors is now being opened. So the way that the partnership has worked in South Africa is such that investors or consumers can now buy crypto assets directly from a banking application. So this just means that the partnership is going to allow more players to come into the fold. Partners or players consumers that were a bit skeptical about, cryptocurrencies, before, the fact that the banks are now, or a bank in South Africa, one of the major banks in South Africa, has now partnered with Luno, for example, what it means is that consumers are now, it signals to consumers that, the institution that they're familiar with is now confident to allow this asset class to them as a whole, which means that obviously the banks would have conducted their checks from a KYC perspective to a regulatory perspective to also a custody perspective and just generally safety perspective as well. So this signals to any consumer or any person looking from the sidelines to come into the fold and allows for more players to come in and invest or participate in the market.
Right, and definitely we know banks are heavily regulated from most of their central banks at this point. So how are they going to also address regulatory challenges associated with crypto trading?
Oh, you see, and that's the beautiful part about what we have in South Africa. There is already a licensing regime that prescribes what the guidelines and rules would be. It's not ambiguous in South Africa. It's such that there are set guidelines that have been put in place that the licensed cryptocurrency exchanges must abide by. And the moment you're certified, and obviously there's continuous review, I think annual review of these exchanges to ensure that they are always aligned with those rules. The moment you're certified, as aligned with the rules and regulations of what allows you the license, then banks feel confident to be able to partner with you, and that's what we've seen with Luna in this instance. So the banks, there's already a guideline that is already set for crypto exchanges or crypto platforms. The banks trust that these guidelines are being met, and that is why they are confident now to partner with the likes of Luno, for example. Now, if you bring that to Nigeria as well, it's something that is going to happen eventually, where there's going to be a guidelines, a set rules and regulations. Once that happens, what we'll now begin to see is we're going to see institutional type partnership, like the banks, for example, asset managers, pension funds, even stock brokerage firms will now be confident because there is a guideline that has been set or that has been set and has been followed assiduously by these exchanges to ensure that partnerships are done in a safe, secure, and transparent manner, which will give investors the confidence that they require to be able to participate in this market.
Right, and definitely we know when it comes to digital assets, we have some of those hacking issues, where blockchain gets hacked and they steal people's funds. Who's going to be protecting digital assets, belonging to clients? Will it be the banks or the crypto platform?
So you see, the crypto platform is already equipped with the necessary technology to ensure custody of secure custody of this of digital assets. Is what we've done, over the years as well. I can speak for Luno, and so it's something that would continue. Now, the banks don't necessarily have to build an infrastructure to cater to that segment of the business from a security perspective. Because again, if you look, for example, the banks don't build the core banking application from the scratch. They allow for people that have already developed those core banking applications to partner with them, and then they ride on those existing platforms. Obviously, when the checks, they would have passed through the necessary checks, definitely. So it's the same thing with the crypto assets. Today, crypto exchanges already have where or how they custody assets, they safeguard assets. And we can go into, or I don't want to go into, the details, but obviously there's the cold wallet and there's the hot wallet and all that, which all have different categories and layers of, authentication and, security that has been attached or ascribed to those kinds of, digital custody, basically. So it's all there, and the responsibility definitely will still lie on the crypto exchanges and the infrastructure that is already in place for those custodies to be set. So the oversight responsibility definitely would now be with the regulators and the stakeholders within that sphere that ensures that the assets are securely the digital assets are secure, just as the cryptocurrency exchanges have claimed that they are.
All right, yeah, I guess so much to unpack there. We'll see if other banks in Africa actually follow and allow, most of their customers to actually buy cryptocurrencies directly from their banks. Thank you so much. Ayotunde Alabi is the CEO of Luno Nigeria. Thank you for coming on today.
Thank you for having me, Ladi.
All right, let's look at some headlines in the crypto space. At this point, we're seeing tech startup Pump.Fun. They've announced a 50% decline in revenue for the latest quarter, reflecting weaker user engagement and increased competition in its market segment. Company executives attributed the drop to a combination of lower transaction volumes and rising operational costs. Analysts say the performance highlights challenges facing fast-growing digital platforms in maintaining momentum while scaling. Then we see Bitcoin mining in China rebounds, define 2021. It staged a comeback at this point after about 4 years ago. Individual and corporate miners exploiting cheap electricity and data center boom in some energy-rich provinces, and that's according to miners and industry data. China had been the world's biggest crypto mining country until Beijing banned all cryptocurrency trading and mining in 2021, citing threats to the country's financial stability and energy conservation. So those are the big stories right there, where we see the crypto market trying to gain some ground over the weekend with Bitcoin there, trying to stage a comeback. But I don't think we're out of the woods yet, at this point. But we'll see if there's some kind of reprieve this week. All right, that's the show today. Thank you so much for watching. We'll give you more updates tomorrow. Definitely, we'll be tracking the MPC meeting right here in Lagos, Nigeria. Will it be another cut or a hold? We'll definitely find out tomorrow. Thank you for watching. I'm Ladi Williams. Bye for now.